Hey everyone, welcome back to Investing Ethos. And boy, it's a long time since I put a video out. I think it was 3 months ago since I had last made a video. It's just a lot of things that happened, and yeah, so back on YouTube, I'll try to be creating more videos regularly. But let's take a look at two of the companies that we've done a lot of videos on. One of them is Janison, and the other one was Chloe. But for Janison, there's quite a lot of things that have happened in the last 3 months, and I think it's kind of a good checkup just to see where we're at with Janison. And I think it's kind of important for us to always review our valuations even after we've put them out there, because you know time goes on, and then let's see if we were right or wrong as time goes on, and let's reassess how we think about the business. And the more we look at it, the better we get an understanding of where the business is at and how the market is valuing it, etc. So let's look at this update. And before we start, please keep a note that this is general advice. I'm not recommending you to buy or sell. That's not really my job. That's not really what I want anyway. I'm here just to provide a general sense of the company from a completely try to be as unbiased as possible, even though I have full disclosure, I do own shares in Janison, but I'm not telling you to buy or sell by watching this video because I do not know your personal financial objectives, goals, situations, and needs. And since I don't know that, I can't provide any personal financial advice because then I'll be, kind of breaking the law, if you could put it, in terms of financial advice. I'm just here to provide general advice of this company, which means I'm not telling you or trying to influence you to say a buy or sell. I'm just here to provide the evidence and basically an update on the company from a fundamental level, and then making my own decisions based on my own assumptions. But I'm not here to convince you to buy or sell because at the end of the day, I'm most likely wrong. So you got to consider that as well. So after the disclaimer, let's look at what actually happened in the financial year, because 3 months ago we didn't have the FY21 results, but the results came in last month, and it was quite good actually. 38% revenue growth. So from 22 million in FY20 to 30 million in FY21, and I think that's a great result. Most of it is driven by assessments ARR, $18 million in assessments, and that is quite amazing because assessments is now making up 2/3 of revenue, and most of it is driven through NAPLAN, ICAS, and also PISA, because we've seen PISA go from, I think, less than $1 million to $3 million. So that in itself is quite a bit of a jump, even though it's from a low base. But when you consider the assessments business as a whole, every single revenue growth adds on top of one another from the existing base. So it's really impressive that Janison managed to grow assessment ARR, because ARR stands for annual recurring revenue. This is not revenue that just disappears overnight. This revenue goes on till the next year. That's if the customer is still willing to pay for the services. So that's something you have to keep in mind. But I think, last financial year, they did a really good job in growing revenues. So another thing that happened since my last post, or since my last video, was that they raised $15 million, which was, I think, not a bad idea. And it's quite a good way of timing it because, 3 months ago, the share price was, at a 20 to 30% discount to what it is right now. And by raising at a high share price, you're not overly diluting the existing shareholders, but And also, more importantly, you can now allocate funds to grow, and they actually need to grow. They need the money to make the investments so that they can grow future revenues. And I think it's a very smart investment, very smart capital raise for the next 2 financial years. So $5 million is to capitalize on revenue growth opportunities, and there's two key revenue growth opportunities. One is PISA for schools, and the other one is ICAS. So what it means by capitalize, it means they need to start expanding their product to many customers. And in order for them to expand their product to many customers, they need more software developers, they need more sales, they need a lot of things. They can't just generate revenues out of thin air, they need to make the investments to have that revenue. So it's kind of good to see them allocate resources to that. And then $5 million for product development and acquisition. So the way I see product development is entirely for the ICAS question set, because they're trying to make ICAS not a local exam but a global exam. So if you're trying to make it a global exam, you need to improve your question set, and you also need to increase the number of questions you put in the exam, so that it covers a whole lot of bases, and it can be a truly international exam, so not just a local exam for English-speaking countries. Also, acquisitions. I think it's quite interesting. They're going to be doing a small acquisition, so they're at late stage for a couple of them, a couple of late tenders. It'll be interesting to see who they go for. I hope that they don't overpay, and it's been a hit and miss. So either they've overpaid for something like language testing consultants, LTC, which was not a good investment, which is not a good acquisition. They really overpaid there, and then it's now biting them because of the goodwill that's flowing through the balance sheet. But then again, they could do a really great acquisition, like what they did with UNSW Global, and got ICAS for $750,000, which is insane. Which meant, they managed to get, a company acquired for less than what's worth, which I think is really cool. That's exactly how acquisition should work. You buy less and you make more. But lately, people have just been buying more. But no, it's cool. It's really cool that they're going to expand the product, and they're trying to go to different areas. And then finally, $5 million in working capital. It'll be interesting to see how they allocate that, because $5 million for 2 years. Basically that's $2.5 million a year. So let's see who they're going to hire. Let's see how they're going to expand their base, because they need to also hire people in sales and marketing, and need people on the ground, and provide and winning customers. I think is really important for them. So like I said, probably two big areas is the product development cost, where they're trying to set up the initial investments to grow for the ICAS global, as well as to provide ICAS kind of tests for parents. So it's kind of interesting to see how the revenues will flow. I have no clue how that'll flow, and I think it's kind of interesting to see over time how they manage to execute. But also the acquisitions going to be very interesting to see who they're going to win, or like who they're going to go for, and how much they're going to pay, and what value that acquired company is going to bring to Janison. So it's going to be really interesting. And then, but more importantly for me, when they did that capital raise, it's for PISA, because they're trying to grow those revenues, and they really need to grow in UK and USA, because those are the two national service provider regions. And if they don't grow, then they don't worth as much long term. So it's really important that they put in the hard yards and put in the investments to grow in those two regions. ICAS, I have complete confidence in them to grow in ICAS, and I don't think it's uh, it would be too difficult. But then again, uh, it'd be great if they manage to sustain the growth without increasing capex. But the gross margins for ICAS is very high, so 90%. So let's see how it all goes. For PISA, they have 15 countries enrolled. 6 of them are national service providers. And to be really honest, it's the 6 NSPs that are the most important for Janison, for the PISA. If they don't expand the number of schools that sign up or the number of students that do the test within the schools, then you don't getting the ARR required. So it's really important that they sign up as many schools as possible for the next 2 years, so that you know there will be a substantial revenue growth. Plus, in the future, I bet you it wouldn't be 15 countries; it'd be like 20 to 30 countries because you know every 3 months I see a new country added. So it'll be interesting to see how flexible and how scalable the platform is when they service more countries long term. And finally, we've finally got some numbers on their horizons. $30 million per annum target for PISA, which I think is really amazing. That's 10x growth from where it is right now. And that's in 3 to 4 years' time. So they're targeting 30 million, and I'm pretty skeptical in them getting there. But then again, they have proven to be right on the money with the forecast. So you know what? I'll give them the benefit of the doubt and say they could get there. So it'll be interesting to see how that pans out. But then there's also ICAS that they're planning on growing as well. I have more confidence in ICAS because I can see that a genuine way in which they can get to 20 million, which is through 1 million tests, and they've historically the actual ICAS exam has historically done that. So it'll be interesting to see how they go. And then finally, the assessments platform, which is, I consider this more like a services kind of business where it's lumpy revenues where, depending on who they win, they get the revenues for that financial year, but then is it recurring? Is it non-recurring? It's really hard to know. And, revenues are not as smooth as annual recurring revenues from the PISA and ICAS exams. So assessments is still like fundamentally important for Janison because through partnerships like with New South Wales Education, they can win further tenders. Like they won the tender for the check-in exam, which I think is really cool. Which means when there are more types of exams or more types of government initiatives, Janison will be first in line to win that contract. So because they have more than 10-year relationship with the government. So, when you have a 10-year relationship with the government, you tend to win most of the tenders because, if they already know you and they know what you can do and they can trust that you can deliver, then they'll give you the contract. So that's what makes me really confident in the assessment business, despite being very lumpy in revenues. And finally, the last update is the forecast. They finally laid it out there for the investor on how they're going to get to $80 to $100 million revenues. And you can clearly see how they split it. So PISA for schools is $30 million per annum that they're targeting. So they plan on getting to 30 more countries, which I think is insane. And I think it's great if they get there. And they really need to go all out with the NSPs because if they don't, then I don't really see them get to $30 million. Number 2 is ICAS. Yep, they really are targeting 1 million per annum in terms of the volume for ICAS tests. So they're going to truly make it a global product. And if they do get there, man, that would be very, very impressive. That's because that's like $20 million added. And then you got the platform clients. They plan on doubling that, which I think is really interesting. Um, and they are going to use part of the acquisition, one of the acquisitions, to get there. So we can already see that they have two acquisitions in mind, one for the assessment platform client, and then one for something else. So it'll be interesting how that will go. But if you count that up, that's 30, 20, 20. That's $70 million already, and then the final, you know, 10 to $30 million is from the existing business unit and an acquisition. So existing business unit will be the learning aspect of the business. So currently, I don't see any growth in that. I probably see $10 million in there. So that's $80 million already, and then the acquisition. So they're expecting $20 million from the acquisition. So let's see if they can get there. That'll be hard. It'll be really interesting to see who they get actually, so that they get to the $100 million revenue target. But I doubt it'll be that. I'll probably think it's more around the 85 to $90 million mark. But that's four financial years down the line, and unfortunately, um, they would have to compete for the PISA for Schools tender in FY 2024. Sorry, in financial year 2024. 20 yeah, financial year 2024. And in order for them to um, maintain revenue growth, they would have to win that tender. If they don't win that tender and the OECD decides to go for another digital provider, then that's $30 to $40 million of forward revenues wiped out, which means the companies no longer have that growth value. So it's really important for Janison from this financial year to financial year 2023 to really grow PISA. And if they can grow that, then it's kind of hard for the OECD to say no. So, but that's the next two years. We'll be very very much looking forward to track how they grow. But long term, it's interesting, and you can say whatever story you like with this company. But I think what I really like about the company is that they're very transparent in how they lay out the strategy. It's kind of easy for an investor just to plug in a number and see what the outcome could be, and then make your growth assumptions from there. Because it's kind of hard with other companies where you still get guessing the number. Well, with Janison, they just say, you know what, here's the number, here's the guess, and you the investor make a call on your assumptions on margins in the long term. So, which I think is cool. So that's about it. It's up to you to decide. I have my thoughts, but you have your thoughts. I'm not here to convince you. I'm just here to lay out the facts, and this is what is being presented to us as investors. They have proven. Hope you guys enjoyed this video. I'll be posting more videos, soon. I'm not gonna wait another 3 months for another video. I'll tell you that. But hope you guys enjoyed this update, and if you want to, keep up to date with the channel and see future videos, please like, subscribe, and comment.